Welcome dear students. Today I am going to discuss with you the concept of the depreciation. Good. What is the depreciation first of all? We will learn like this. What is the depreciation first of all? Number one. Number two. What is the need to provide depreciation? Number three. Accounting for depreciation. Accounting for depreciation. Good. Now first of all we will see what is the depreciation means. Here the depreciation means in case if we purchase an asset, we purchased an asset on 1/1/2017. Assume it is a plant and machinery. Assume that it is a plant and machinery. Whether the plant and machinery which is purchased on 1/1/2007 at a price of 5 lakh will give you the same value in case if you would like to dispose of on December 31st 2017. Say for example on 31st December 2017 you offered it for sale. Will you get the total amount of 5 lakhs what you incurred on it? No, you cannot. Say for example, the person who wanted to purchase from you offered you to purchase the asset at 3,50,000 rupees. 3,50,000 rupees. That may be the realizable value on 31st December 2017 which you have incurred rupees 5 lakhs to purchase the same. That means what? Here whatever the asset that you have purchased at 5 lakh, but you are now you are getting only 3,50,000 rupees to on resale of the same. The difference in between, the actual cost that you incur rupees 5 lakhs less realizable value or value on 31st December 2017, that is 3,50,000 rupees, is nothing but the 1,50,000 is nothing but depreciation. This 1,50,000 rupees is nothing but the depreciation. Hence, you may observe here one thing. An asset value comes down, fallen, looking at downtrend. Hence, deterioration in the value of the asset is nothing but depreciation. Deterioration in the value of asset is nothing but depreciation. Good. We got an answer for the depreciation. What do you mean by the depreciation? Depreciation is nothing but the deterioration or diminishing in the value of the asset that we have purchased and used or put to use on in business. Good. Now, why we need to provide the depreciation? Now, what is the need to provide the depreciation in the books of accounts? Good. As far as the books of accounts is concerned, the books of accounts must have to show true and fair view of affairs. affairs. Affairs are nothing but the transactions or operations. Transactions or operations. That means books of accounts must have to show the true and fair view of the affairs. Hence, without providing depreciation, if you are showing the asset value in the books of accounts, the same value when what is the value when it was being purchased, it will not show a true and fair view of the affairs. Let me show you by taking an example regarding this. Let me show you by taking an example regarding this, how it is. For example, as we already discussed, in the year of 2017, on 1st January, we purchased at 5 lakhs. But on 31st 12th, 2017, the value of the asset comes down to 3,50,000 rupees. That means here a value deterioration occurred to the extent of 1.5 lakh. In case, if we do not provide this 1.5 lakh as the depreciation, if we do not mention right in the books of accounts this 1.5 lakh depreciation, and in the year end also, that means in case if you are preparing the balance sheet on 31st 12th 2017, if you do not provide the depreciation, the asset value still will show rupees 5 lakhs, which is not a true picture of your business, which is not a true picture of your business. Not only this, as far as the disclosure requirements are concerned, as far as the accounting standards, because each and every person, while he is preparing his books of accounts regarding his business concern, he must have to follow all the accounting standards as per the accounting standards preferred and suggested by ICAI, must have to be followed by each and everyone who at the time of preparation of their books of accounts. As far as the accounting standard 1 is also concerned, the accounting standard 1 says that, or insists on the accountants, each and every person must have to disclose all the relevant information which will affect the financial position of the organization and profitability of the organization. Otherwise, the books of accounts will not deemed to be showing true and fair view of the affairs. Showing true and fair view of the affairs. For example, as far as the accounting standard 1 is concerned, disclosure requirements, on which the disclosure requirements are insisting, each and everything which influences the financial position and profitability of the organization must have to be provided in the books of accounts. Likewise, for example, in case if you are showing on January 1st 5 lakhs and on December 31st also 5 lakhs without providing the depreciation, can you say that the books of accounts are showing true and fair view of the affairs? Absolutely no. Absolutely no. Hence, to show the true and fair view of the affairs of the books of accounts, one must have to provide depreciation in the books of accounts. Good. Now, the next reason why we have to provide the depreciation. The next reason why we have to provide the depreciation means, let me show you, let me present this case. This is a situation in front of you. For example, I purchased a plant and machinery at a cost of 10 lakhs, on 2015. The life of this machinery is only to the extent of 5 years. After 5 years, in case if I use the same machinery what I purchased before 5 years, my operating costs may be gone high. Hence, to reduce my operation costs or running costs, or to minimize my running cost, I need to replace this asset compulsorily after 5 years. That means whatever the asset that I purchased in the year of 2015, I need to replace the same within 5 years. Now, In case if I do not provide any depreciation or any reserve for the depreciation, from where I can get the money again to replace the money, asset? I need to utilize again new capital. I need to introduce further capital in the business. On the other hand, in case if I provide the depreciation every year, say for example, whatever the depreciation that we are providing, it is not out of pocket expenditure. Again, I am using a variety word or a new term, out of pocket expenditure, or sunk cost, which will be called as a sunk cost. What do you mean by the out of pocket expenditure? The out of pocket expenditure is nothing but the expenditure already we have incurred or we have paid out of our pocket, out of our bank account. For example, in case if we paid the salary, it is an out of pocket expenditure. That means we have to pay from our bank account to the outsiders. For example, in case of the depreciation, even we are providing the depreciation, even we are debiting to the profit and loss account of the concern, the depreciation is not moving out. The cash is not going outside. We are keeping the cash ourselves. Just we are providing a reserve. A reserve means which is not touchable, but which will be provided out of our profits only. A reserve is nothing but provided out of our profits, undistributable profits. Hence, this reserve may be kept in a showcase like. After 5 years, whatever the amount that we placed in the reserve of depreciation, that must have to be utilized to replace the machinery again. Hence, to replace the machinery after its obsolescence, after its no use period, we must have to provide the depreciation. These are the reasons why we have to provide the depreciation also. So, is there any legal obligation on the part of the organization to provide depreciation? Yes, of course. As far as the income tax rules are also concerned, depreciation is a mandatory, must providable issue. Without providing depreciation, in case one presents his profitability in front of the tax authorities, the tax authorities will not allow you to depreciate, without depreciation to tax you. And why? Sir, what will happen? In case if someone do not provide the depreciation, his profits may be hiked. He needs to pay more tax. Why that much of risk one will take without providing the depreciation? Because providing the depreciation will reduce his tax liability. Because of so many reasons, somebody may not show interest to provide the depreciation in case if the organization wants to make a window dressing. In case if the organization established in an area or in a sedge in an 100% export oriented area, it might be provided with tax incentives for a period of 5 years or 10 years. As long as that 5 years, that 10 years, whatever it may be the profit that the organization earned, and that profit it will not pay 0% tax. Hence, they do not bother whatever it may be the amount of the profitability of the organization. In such a case, what they will do is they will not provide the depreciation as long as they are enjoying the tax holiday. After once they finish the tax holiday, they will start providing depreciation on the actual cost what they purchased after before the 5 years. And it is not at all your cup of tea. It is not at all your scope, your what we call it syllabus. But these are all the reasons why one must have to provide the depreciation on the assets that are using in the business.